Hey everyone, welcome back. I'm so glad you're here. And today I'm going to be talking about investing with a self-directed IRA. So, this is a great wealth building strategy. If you haven't heard me talk about this, I've done tons of podcasts and now I have an online course that teaches you all the ins and outs about how to invest with your self-directed IRA, both buying properties, becoming a private money lender, and a little known secret of using an option agreement to use a very small amount. Like I did a deal where I did only $100 out of my SEP IRA. We're not going to be talking about that one today, but stay tuned because I will have that one up pretty soon. So what I'm going to do first is I'm going to share my screen with you so we can go over the presentation. So give me a minute because you know how I am. I'm so okay. Buying property with your small dollar or self-directed. I do specialize in helping people that have less than $5,000 in their self-directed IRA account. Like I said, I've done tons of podcasts on this. I've written some articles. One was posted in Forbes Online. I've been in books about this, but this is a great wealth building strategy. And, it's the thing that you don't really know about until you start knowing about it. And so let's talk about the types of IRAs that you can use. So you can use traditional, the Roth, the SEP, HSA, your health savings account, an education account. They're usually called Cloverdale, and the checkbook IRA. Now, here's the thing. They have to be with a custodial company. So what does that mean? So I'm in the Dallas, Fort Worth area. So I'm just going to give a shout out to Quest because they're the ones that I use. It just means that there has to be a custodial company. So it's different than like Fidelity or maybe your work employer has a 401k. So self-directed just means that you can take the funds and you can invest them in real estate. You can be a private money lender. There's actually a lot of things that you can invest your self-directed IRA. But for today, I am just going to be talking about buying a property. I'm going to be talking about buying a property. I don't know why I'm not advancing. I have to hit the right button. So we'll just leave that in because that's kind of a funny thing on Nancy, because you all know I'm real estate investing, but not so much on the tech stuff. So in fact, this is just a great thing to come in here with a disclaimer. So number one, I'm not a financial planner. I'm not a CPA. I'm not an attorney. Always consult your financial advisor, CPA, or tax attorney prior to investing with your IRA. Conduct your own due diligence, which we're going to be talking a lot about later on every property, borrower, and investing opportunity. And the presentation that I give and that I do give is based on my real life investments. So far, they've all worked out really well. And that's why I want to share this knowledge with you. So buying a property with a self-directed IRA, there's really three things that you have to think about. Number one, where is it? So you'll hear me talk a lot about location. And when I talk about short-term rentals, when I talk about buying really any investment property, and it isn't that old saying, location, 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 because location is going to give you appreciation. Is it a good buy and hold? It helps with the exit strategy. But in this case, what we're talking about is, can you put your eyes on the property? Sometimes people like to invest out of state, which is completely fine. But if you can't put your eyes on the property for inspections and just to see what the condition is, what do you know about the area? Do you have trusted boots on the ground? Now, we talk a lot about trusted boots. So trusted boots is someone that, you would say, yes, they know what they're doing. You're not just calling up some person and saying, hey, go by and drive this property for me. You could, and people do, hire people to go and take pictures and send them, but that's really not the same thing. So you just want to make sure that the location is good. Number two, the value. Is it in an appreciating area? What is the after repair value? Because you might be looking at a distressed property. When I teach about short-term rentals, I actually talk about how you can buy a property right off the MLS and get to going with that. And you can buy rental properties, short-term vacation homes with your self-directed IRA. So we'll kind of, as you see how we buy properties, And if you have enough cash in there, maybe that's something that you can do. And then the cost of repairs and the cash flow. Because one thing that's really important about investing with a self-directed IRA is all the money has to go in and out, meaning any income that you receive off the property has to go into the IRA, and any repairs, utilities, insurance, all that money. So there are some rules. So that money has to come out of the IRA. So there's definitely rules that we're going to talk about today about how you use your self-directed IRA. And then the exit strategy. I talk a lot about exit strategies, and I always try to have at least 2 exit strategies for every investment that I'm looking at, every investment property. So does this make a good buy and hold? Is it an owner finance property? Is it a short-term rental? Is it a flip? Is it a wholesale? So I can tell you that for my investing purposes, I don't do flips in my self-directed IRA. Just for that reason about all the money has to go in and all the money has to go out. So if you're having a lot of repairs on a property and you have, I mean, it could just be time consuming with the paperwork that you have to do. Depending on your custodial company, they may charge you for sending the money. So let's say you owe a contractor $1,000 and they want to charge you like $5, $10, $15. And there's sometimes a delay, not always, but it just depends on how your custodial company works. So that's why I don't do it. It's just a little bit, it's just too many steps for me. Love to do owner finance. That's my go-to strategy when I'm using my self-directed IRA. And I have wholesale properties using my IRA. And that's just a very interesting, I haven't done it very often, but it's actually a pretty cool way where you can just, because when I take the money out, or when you have what's called a direction of investment, you're not paying taxes on that money, right? Because you're purchasing a property, and then you could put the money back. So that'll be another case study that we'll talk about. So always, always, always do your due diligence. Now, this goes without saying, and I can't say this enough, no matter what your investing strategy is on real estate, you always have to do your due diligence. So I'm always a proponent of like getting comps for both the sold properties in the area that you're looking at and also rentals, right? Because why? Because you're looking at different exit strategies. What are the repairs that are required and how much is that going to cost you? So if you don't know how to analyze, how much a foundation costs or how much plumbing problems cost or what a new roof costs, if the seller's, let's say the seller already took the proceeds from the insurance. So you got to pay for that out of pocket. And who is giving you the numbers? I always talk about that too. Where are you getting your numbers? If you're not familiar with, how to analyze the data, how are you going to know if this is really a good deal? And then, of course, pictures of the property. And then I use something, I'm a broker here in Texas, and I use the real property report. And that's something that all realtors in Texas have access to. And it's an amazing report because not only can it give you historical data on the property that you're looking at, sometimes even historical pictures, it can give you area, it can give you all the demographics you could think about. It's a wonderful tool. And I personally use it on every single investment because it kind of gives you an idea if you found a property in an appreciating area. It has heat maps in it as far as, it'll tell you like, is this a distressed area? It has flood information on there. I mean, it's just wonderful. I don't see enough realtors using this. And so if you're an investor, make sure you ask to get this report. Now, the paperwork is pretty much the same as if you were purchasing just a property that you were going to flip or, buy as a buy and hold. There's a contract. There's also what's called the direction of investment. So that is from the custodial company. So you have to direct them about how you're investing your money in your IRA account. So there's a deed of trust, and the deed of trust. So let's say, when I purchase a property, I'm going to show you in this example, I don't own the property. It is owned by my IRA. And there's a big difference for that. So like for tax purposes, I don't report that under my LLC or anything like that. The income that I'm earning is deferred for the time being because I'm not taking the money out. So it's a good strategy if you're looking to increase your retirement accounts, like you can put more money in it. It doesn't have anything to do with the limits, right? Like if you just want to put like $6,500 a year or whatever the new limit is right now. There's always a settlement statement. So that's the same as if you're purchasing a home. And then, of course, there's amendments as needed. So it's the exact same process of purchasing a property. There's just two main differences. Number one, the direction of investment, and then the wording of how the contract's going to be filled out. Because again, it's not my company, it's not my LLC that's buying it, it's my IRA, which I'm going to show you an example here in a minute. Now, when you are making a decision to use your self-directed IRA, there are some rules that you need to know about. Now, this is why I say check with your tax advisor, your CPA, about the structure of your, if you know, or you can speak with your custodial company as well. They have wonderful agents here. Shout out to Quest. If you have questions about how you can invest with it, but there are certain rules. As I did this recording, this is what the rules were. So number one, the purchase price of the property. So let's say that you have $100,000 or you have $50,000 in your self-directed IRA, but the property that you're looking at, let's say is 120,000, right? So you don't have enough to buy the whole thing, right? You don't have the 120,000 plus the closing costs and all of that. And you can't supplement it, because what that would mean is when I talk about private money lending, you can't private money lend to yourself. Wish that was the case, but you can't. So your IRA must own the property in totality, if that makes sense. Now, I've had people ask me about this and I've researched it. And if there's another way, speak up, because I have not found another way, except for you can combine qualified member accounts. So the case study that I'm going to show you later on in this presentation is about how I bought one property with 3 separate IRAs. And you can do this, you know, so a qualified member account is like a spouse, you know, family member, somebody that, you know, there's like these little tiers that they have about who can, you know, sorry, who you can combine money. And I don't mean like combine the money in an account. It's literally set up like the 3 entities own a percentage of the property, if that makes sense. So that's rule number 1. So if you don't have enough in your self-directed IRA to buy the property in whole, then you'll have to get a qualified member like your siblings or your kids. Like you could combine educational, a health savings account, your Roth, your SEP. You can combine all of those as long as it's your husband, it's your kid, that kind of thing. And again, you can get clarification about that with who qualified members are. And again, it's not combining the funds, it's combining the monies in the account. So each account will own a percentage of that. And I'm going to demonstrate that here in a second. Now, the self-directed IRA has to make all the payments and receive all the income. So it's a hands-off transaction. So remember when I said I don't do flips? Well, this is why, because it's just too much for me. Now, I know people that use their self-directed IRAs and they do flips all the time, and you know, they're all good with that. The one person I'm thinking of in particular, they have their own crew, so they're able to, you know, maybe wait, because sometimes it might take 3, 4, 5 days before you can get a check or a withdrawal from your IRA. So rent payments, owner finance payments, all that is good going into the IRA. But if you have any expenses for the property, like insurance, property taxes, then you have to submit a request to the custodial company so that they can pay that bill, if you will. And so that's why I like owner finance, because I set it up with a third-party loan servicing company, and they just take care of all of that for me. So I don't have to worry, you know, all the money just goes in. And since it's owner finance, I'm not having money go out. So, but if you had a short-term rental or you had a buy and hold property, any rents that you would receive would have to go through the self-directed IRA, and then any expenses would have to come out of it. So it's, you know, it's a little bit more paperwork, and it's just not something that I like to do, but I like to do owner finance with them. So now the documents that are required, this really isn't so much a rule as things I've learned. So as I've done these deals, what I have found is that you've got to find the title companies that know and understand the paperwork, and not all of them do. And I'm going to give you a good example. I was closing on a property, And it was one that I was purchasing with private monies from other people. They were loaning me money to buy the property out of their self-directed IRA. And then once I acquired the property, I was turning around and owner financing. And it just was so that I actually sold the home, and we were kind of doing it, not a double close, but I was purchasing the property one day and I was selling it owner finance the next day. Anyway, the title company said that they knew how to do it, and they did not. And it just delayed the closing. They didn't understand the paperwork. And you are working with the custodial company. I mean, they have all the paperwork. They know what needs to be done. But I have found that if the title company does not know exactly how to write out the deed of trust and the promissory notes and all of that, it can be challenging. And I had one title company, they always have an attorney there. And I asked them, hey, do you know the seller actually wanted to close at the title company? So I said to the title company, hey, do you know how to do this paperwork? And they said, no, but if you show us how to do it, I'm sure we can get it done. Well, if I'm showing you, I shouldn't have to pay the attorney, right? So just make sure that the title company really does understand what's involved with closing on a property using self-directed IRA funds. Now, how do I strategize when I'm using my self-directed IRA? So when I come across properties, I don't automatically go, whoa, I'm going to use my self-directed IRA. So I go through, my steps. So the first one, of course, is location. And then I look at the availability of current current inventory. Now, remember, I said I like my strategy to be owner finance. So I kind of want to know, what my competition is, what owner finance being, I'm holding the note on the property. So I'm going to sell it. And I do use the MLS to do this. I list the properties, but what I'm doing is I'm selling it to someone that's going to give me a down payment. I want to look at what kind of repairs, because typically with owner finance properties, the ones I purchased, I have owner finance, I've done 0 repairs. And that's kind of what's cool about owner finance properties is, everything is negotiable because you're the owner and you're financing it to someone else. So if any of you know about my most famous deal where I used $5,000, the house was about falling apart. And that's another podcast, but literally sold this house for $50,000 within 3 days with a sign in the yard. And I didn't do one repair to the house. So that's what I like about that. And I bought it with my self-directed IRA. So I do look at the current sold prices and the current rental prices. What if I owner finance it and I pay maybe a little bit more, what's my return on investment over time? Because one of my strategies with investing with a self-directed IRA is I'm looking to grow my retirement account. That's what I'm doing. I've been self-employed for, 100 years, not quite that long, but I'm looking for ways that I can grow that either tax-free or tax-deferred. And this is a great strategy for that. Now, after I determined that, oh, you know what, this is going to be a property that I'm going to use my self-directed IRA, here's the paperwork. I mean, it's really pretty simple. You do use this is a 1-to-4 residential contract. You just have the Mr. and Mrs. Seller there. And then I buy my properties, KB Homes or assigns. And really the Texas, this is in Texas. And our contracts are assignable anyway, but I always put that there. And I just let the seller know, because people say, well, what did the seller say? Well, you know what? Maybe I'm going to buy it in another entity, which in this case is exactly what's happening. Because if you'll see in other modifications here, this was an amendment I did. Once I knew, like I got it under contract, and then I strategized, said, okay, this is going to be a good property for my self-directed IRA. Then I'm simply doing name of buyer is changed to, and this is, I'm with Quest Trust Company for the benefit of, and then Nancy Wallace Lobbs and my account number. So that changes all of this. So that's who's buying the property. So that's why I put, KBN Homes LLC or assigns, because sometimes I do buy it with another entity. In this case, the entity is going to be my self-directed IRA, but it's the same contract, the same terms that I use on every other deal. Now, the next piece of paperwork I need, so once I've done a contract, I've done the name change, now I have to do what's called a direction of investment. So this is actually the paperwork that it's just some sections of the paperwork that I downloaded. And it just is going to say, okay, well, who's the account holder? Well, that would be me. It's going to have all my account info. And then it's going to ask me what I want to do with this, money, like what's the property that I'm going to do. So you put the property in there. It's going to ask me if there's going to be a third party servicer, which there is, because I knew I was going to own or finance it. And I'm just acknowledging that, yes, that the IRA now is going to own this property. That's what this direction of investment, it literally is like the paper trail, if you will, to say to anyone who's looking at the, if you were to get audited or something, that's like, no, I didn't take a distribution. It's not a distribution. Therefore, I'm not going to be paying taxes on it. I'm making a direction of investment. So I'm just taking those funds that are in my account and I'm, if you will, transferring them to a piece of property that now the IRA is actually going to own the title to, not me. Now, let me just kind of demonstrate, because I know when I start talking about this, it's like, what? And I've been doing this for a while, but here's one property just to give you an idea of how you can put it all together. And this had to do with, I bought one property, but I used 3 separate self-directed IRAs. So this happened to be a distressed seller situation. It was an off-market deal. It was getting ready to get listed, and I got contacted. It was a referral. It's a 3-bedroom, 2-bath, a little over 1,600 square feet, built in 1951. So typically when I purchase rental properties, I'm looking for something 1978 and newer, like in the 80s or something. So I don't usually buy houses that were built back in the 50s. Some people love that, and that's okay. It's just my own investing strategy. But I thought, well, maybe this will be a good owner finance property. So I'm doing my due diligence, right? So I found out that the average rents in this area was $850 a month, and the average sales price was $97,000. Okay, so those are kind of my first numbers that I had to work with. So I go back, I said, then I could, so these were the strategies that I came up with. So I could do 2. There was the long-term rental, or there was owner finance. And I chose to do owner finance for a multitude of reasons. Number one, the price. I was able to buy it with my self-directed IRAs. 2, it was in an area that I didn't want to have to hire a property manager. And I felt like that this, I could actually kind of get more money for the house if I did an owner finance at this particular point in time. So that was my exit strategy. But notice that I have 2, because if something fell out that I couldn't sell the property, I just couldn't get any buyers, I couldn't get the terms I wanted, then yes, I could always do long-term rental. So the purchase price on this property was $60,000. Now, how am I going to buy it? Well, I have 3 IRAs. So I have a SEP IRA that had $50,000. And then I have a traditional IRA that had $5,000 and had a Roth IRA. And actually one of these IRAs was my husband's. So we said, okay, we're going to take 50 from this account, 5 from this account, and 5 from this account. And then we're going to buy this property. So we ended up selling the property for $95,000. So I'm buying it for 60. So I already, am making like $35,000 right off the bat. I collected a $9,500 down payment, 10%, and the buyer is paying 9.5% interest for the next 15 years. So that's how we calculated it. So that's how we set it up. So I had to purchase the property. So that was one transaction here that I was at a title office. I closed on the property, and then we turned around and did an owner finance where, I sold it to the end buyer. This was not a wholesale. This was, so my IRA now owns this. And you're like, now how does that work? Well, not me. Remember, I don't own it. These 3 separate entities, these 3 separate IRAs own a percentage of that property. So I'm going to show you how that works. So this is just a kind of a recap again. So that sold the property for $95,000. We collected 10% down, or $95 at the signing of the contract. The monthly payments are $892, principal and interest only. They are paying their property taxes separate. And if they paid this over the course of 15 years, they're going to pay an interest alone like $75,000. Now, some of you might be some math whiz. And so if I made a mistake on the math, reach out to me or whatever. But the last time I calculated this is what I came up with. So the good thing is all this money is going into my IRAs, not to my pocket. So the bottom line, this is a wealth building strategy that I'm just sitting back watching my IRAs grow. Now, how does that look to the three IRAs? Okay, so the SEP IRA was the one that had the $50,000 towards the purchase of 60. So it owns 83%, right? Or $741 of that $892 payment. That's what the SEP gets every month. The traditional IRA and the Roth IRA each own 8.5% each. Now, the custodial companies do not figure out the percentage. This is something that the investor does, and then that part of that direction of investment on the SEP. So I had on each of those directions of investments, I had to fill out 3 separate forms for the 3 separate IRAs. And I had to say, okay, the SEP is going to be 83% ownership. The traditional IRA is going to be 8.5%, and the Roth is going to be 8.5%. So you see how then that all comes up to 100%. And then as far as the monthly payment goes, the $892, I think it was 51. So $741 goes into the SEP IRA every month, and 76 and 76. Now, you might say, well, that's not too much money, but you know what? Over the course of 15 years, it's all going in there and I'm not getting taxed on it. So I won't get taxed on it until I withdraw the funds. Does that make sense? So I'm growing. And the thing is, I can own multiple properties. So if I have, and in fact, we do. So I have another, this IRA owns some more properties, this one owns, and they all get a percent, right? So that's why we like this strategy. Now, how did that kind of look if you did it on paperwork or whatever? So again, here's what the SEP IRA owns. It was 83%, they're traditional and Roth. So the purchase price was 60. So it's a net gain of 35,000. So we bought the property for 60, but we owner financed it for 95. So $75,000 is for the interest paid over the life of the loan. And if this person stopped paying, then the IRAs can take it back. But this kind of shows you, this is called the percent of undivided interest. So remember when I showed you the name change, the Quest Trust Company for the benefit of, my name and the account number, and then it'll have an additional line that says for the undivided interest of 83% in, XYZ property. So that's what that's showing. And then here's the principal amount, here's the interest, and then the ending balance in 15 years of so this one went from 5,000 to 14,500, but this one went from 50 to 91. If I didn't do anything else, if I didn't invest in any of the money, but I can always take out the rest of that money and keep on investing in other properties. So thanks for watching. If you want more information about investing with your self-directed IRA, download my free ebook. It's down here in the description. Subscribe, give me a subscribe and follow me on YouTube. I'd really appreciate it. And if you really want to get into self-directed IRAs, I do have an online course that goes through all the different scenarios of how you can invest and the paperwork that you need. So, or just reach out to me, but do get your free ebook. It's a good start if you've always wanted to find out how to invest with a self-directed IRA. Today's your day. Thanks much. See you soon.